Gold and silver are moving in a way we haven't seen in months. The charts are showing a specific pattern that usually leads to a breakout. Have you checked the latest spot prices this morning? Things are developing much faster than the mainstream news is reporting. We need to look at the immediate technical signals. The resistance levels for gold are finally starting to thin out. Silver is following close behind, but with much higher volatility. Most people wait for the news to tell them when to buy. By then, the biggest part of the move is usually over. I want to show you why this week is different from the last 3 months. It all starts with the latest inflation data coming out of Washington. The numbers aren't lining up with the official narrative. Look at the way the bond market reacted on Monday. That was the first real warning sign for the dollar. When the dollar loses its footing, precious metals find their floor. Do you think the current rally is sustainable? Many analysts are calling this a bull trap. But the volume on the buying side tells a different story. Institutions are quietly moving back into physical positions. They aren't just buying paper contracts anymore. You can see the physical demand reflected in the rising premiums. Silver eagles and gold bars are becoming harder to source at spot. This is a classic sign of a tightening market. What happens when the supply can't meet the sudden surge in demand? Prices have no choice but to move upward. We are seeing a specific crossover on the moving average charts. It's a technical indicator that traders watch very closely. If we close above the current level tonight, it triggers a buy signal. Have you noticed how quiet the big banks have been lately? They usually talk down gold when they are trying to accumulate more. It is a pattern that repeats every single cycle. We are currently in the accumulation phase of this new trend. The window for lower prices is closing. I'm looking at the silver to gold ratio right now. It is currently stretched to a point that historically favors silver. If silver catches up to gold, the percentage gains could be massive. Are you prepared for a 20% move in a single month? It sounds extreme, but it has happened before under these exact conditions. The geopolitical tension is only adding fuel to the fire. Investors are looking for a safe place to park their cash. Real estate is cooling off and the stock market feels shaky. That leaves very few options for wealth preservation. Hard assets are the natural choice during times of uncertainty. Look at the central bank buying spree over the last quarter. They are stockpiling gold at record rates. They know something about the future of the global currency system. Are you following their lead or waiting for a sign? The sign is already here if you know where to look. Let's break down the specific price targets for the next 48 hours. Everything depends on how we handle the next level of resistance. We are watching a specific price level on the gold chart. It's been tested 3 times in the last month alone. Every time it hits that ceiling, it pulls back just a little bit less. This is what traders call a tightening range. When the range gets this small, a breakout is almost guaranteed. Have you ever seen a spring being compressed? That is exactly what the silver market looks like right now. The pressure is building behind the scenes in the futures market. Open interest is rising while the physical inventory is dropping. That is a massive divergence that cannot last forever. Honestly, the silver shorts are looking very vulnerable this week. If we get a sudden spike, they will be forced to cover their positions. That creates a feedback loop that sends prices straight up. Do you think the banks are prepared for a short squeeze? They usually have a plan, but the retail demand is getting hard to control. Look at the premiums on physical coins at the major dealers. They aren't coming down even when the paper price dips. That tells you the real value is much higher than the screen price. I've been tracking the flow of gold out of the Western vaults. It is moving toward the east at a staggering pace. Shanghai now sets a higher price than London on most days. This shift in power is changing the way metals are traded. We aren't just looking at a local move anymore. This is a global revaluation of what real money is worth. How much of your portfolio is currently sitting in hard assets? Most financial advisors suggest 5 to 10%, but in this environment, that might not be enough protection. The purchasing power of the dollar is eroding right in front of us. You see it at the grocery store and the gas station every day. Gold and silver are the only things that haven't fully adjusted yet. That is why this week is so critical for your strategy. The market is giving us a clear signal before the rest of the world wakes up. Look at the technical crossover happening on the daily chart. The 50-day moving average is about to cross the 200-day. In the trading world, this is a very bullish sign. It often marks the beginning of a long-term upward trend. Are you watching the silver miners as well? They usually lead the metal when a big move is coming. Right now, the mining stocks are starting to outperform the bullion. That is a classic leading indicator for a major rally. It means the smart money is betting on higher prices very soon. What happens if the Fed decides to pivot on interest rates? That would be the ultimate green light for precious metals. Even the hint of a rate cut could send gold to a new all-time high. We are closer to that moment than most people realize. The economy is showing cracks that the media is trying to ignore. But the charts for gold and silver don't lie. They reflect the true state of the global financial system. Are you ready for the volatility that is coming this Friday? It's going to be a wild ride for anyone holding paper assets. Friday's market close could define the next 6 months. The options expiration is usually a time for price manipulation, but the buyers are absorbing every single sell-off lately. That shows a massive amount of strength in the underlying market. Have you ever seen gold hold this well during a dollar rally? It's a rare occurrence that usually points to a decoupling. Gold is starting to trade like its own currency again. Silver is also separating itself from the industrial commodities. Copper and zinc are down, but silver is holding its ground. That is a major shift in investor sentiment this week. Honestly, the silver shortage isn't just a theory anymore. Major electronics manufacturers are starting to worry about supply. They need silver for everything from solar panels to EV batteries. The industrial demand is at an all-time high right now. Where is all that extra silver going to come from? The mining production has been stagnant for years. It takes a long time to bring a new silver mine online. You can't just flip a switch and increase the global supply. This creates a massive structural deficit in the market. Do you think the price can stay this low with that kind of math? The math suggests a much higher price is inevitable. Look at the ratio between paper silver and physical silver. There are hundreds of paper ounces for every physical ounce. If even 1% of paper holders ask for delivery, the system breaks. That is the black swan event no one wants to talk about. But it is a very real possibility in the current climate. Are you holding your metals in a vault or at home? Having physical possession is the only way to be truly safe. Counterparty risk is a major factor during a financial shift. We saw what happened to the nickel market a few years ago. The exchanges can just cancel trades if the price goes too high. That doesn't happen when you have the metal in your hands. Look at the weekly chart for gold one more time. It's forming a perfect cup and handle pattern. This is one of the most reliable bullish signals in technical analysis. The breakout target is significantly higher than where we are now. How would you react if gold hit $3,000 an ounce? It sounds like a big jump, but it's only a 20% move. We've seen much bigger moves in much shorter time frames. The volatility is your friend if you are already positioned, but it is your enemy if you're trying to chase the market. Most people will wait until they see it on the nightly news. By then, the entry point will be much less attractive. I'm looking at the volume bars on the bottom of the chart. They are turning green and getting taller every day. Someone is buying the dips with very deep pockets. Are you watching the central banks in the Middle East? They are trading their oil for gold instead of dollars now. This is a fundamental change in the global trade structure. It's the kind of shift that only happens once in a generation. The era of cheap gold and silver is coming to an end. We are witnessing the death of the old monetary order. Look at the way the BRICS nations are moving their assets. They are creating a new gold-backed settlement system. This isn't just a rumor anymore. It's being implemented. What does that do to the value of the paper dollar? It makes it far less attractive for international trade. When nations dump dollars, they buy the only thing they trust. That is why gold is the ultimate insurance policy. Silver is the high beta play on that same trend. It moves faster and further when the panic sets in. Honestly, the current prices are a gift from the market. Most people will realize this in about 6 months. Will you be looking back with regret or satisfaction? The charts are screaming that the bottom is already in. Look at the triple bottom formation on the silver daily chart. That is a massive foundation for a multi-year bull run. Even a small move in silver can change your life. Think about the leverage you get with physical ownership. No one can freeze your gold bars in a digital bank account. No one can devalue your silver coins with a keystroke. Have you ever felt the weight of a 10-ounce silver bar? It's a feeling of security that a bank statement can't provide. The technical indicators are all lining up for a breakout. Relative strength index is climbing out of the oversold zone. The MACD is showing a bullish divergence on the weekly. These are the signals that professional traders wait for. Are you ready to act before the next candle closes? The window of opportunity is usually smaller than you think. Once the breakout starts, it doesn't wait for anyone. Look at the price action in the Asian markets tonight. They are leading the way while the West is asleep. This is where the real price discovery is happening now. Don't let the short-term fluctuations distract you. Focus on the long-term trend, which is clearly upward. The fundamentals have never been stronger for metals. The technicals are finally matching those fundamentals. What is your target price for silver by the end of the year? $40 an ounce is well within reach from here. $50 is the psychological level everyone is watching. If we break 50, there is no overhead resistance left. It's blue sky territory for the silver market. Gold will likely lead the charge into the thousands. Are you diversified enough to handle the coming shift? This week is the time to finalize your positions. Don't say the market didn't give you a fair warning. The indicators are bright red and flashing right now. Keep a close eye on the close this Friday afternoon. It will tell you everything you need to know about next week. Are you watching the charts with me?